we're reacting to the Bank of Canada news, right?
We are. The Bank of Canada met on September 4th and lowered 25 basis points. Economists, by and large, had predicted it. And really, they're predicting that the Bank of Canada is going to be much more aggressive in their rate cuts. When they first started cutting, I was, estimating maybe 125, 150, 175, maybe 200 basis points in terms of rate cuts. I think we might see it even more aggressive than that right now. And we have another meeting October 23rd and then again in December. So there's 2 more meetings this year. And I'll bet we're going to see 2 more cuts, Todd.
Yeah.
I think that we will. So I'm going to be watching very closely. And, I think that it's going to be a good thing for Canadians, having the rates being lower. Obviously, inflation is a big piece of the pie here. And right now, inflation's moving in the right direction. And economists are basically forecasting that if the housing inflation had subsided and obviously interest rates were lower, inflation would be basically at 1%. So housing and this cost of housing and the cost of borrowing is really having a big impact on inflation. So that's something we're going to be watching very, very carefully. Now, the August inflation numbers are not out yet as the time that we're recording the show. So we're going to be obviously keeping a close eye on that. We're going to be watching GDP, and we're going to be watching what is going on in the U.S. and see what they do with the Fed and that rate.
Yeah, I find it interesting that inflation is tied to mortgage lending. And of course, mortgage lending is tied to inflation.
Exactly. I mean, and one can be inflationary. Do you know what I mean?
Yeah.
Especially if the rates do go down too quickly, too low, that can be inflationary.
Yeah.
Right? Because then maybe Canadians have more
Prices
access to
go
very,
up.
very, very low credit, very cheap credit. And maybe it's going to drive the prices of real estate up.
Yeah.
And that's my fear, Todd.
Yeah.
My fear is that we have buyers that are on the sidelines right now and say, I'm just going to wait for the rates to go down a little bit. But they wait, and then as soon as the rates go down, the prices of the real estate's going to be up.
Yeah.
What we say is you can always date the rate, but you're marrying the home.
Yeah.
Right? So the purchase price, that's not changing.
Yeah.
The rate can change. So, that's something to really take into account. And, I think Tiff Macklem, the governor of the Bank of Canada, I'll say this again. I think the Bank of Canada gets this right 0% of the time. And they're always more cautious than they need to be. They're overly cautious. And they're always going to err on the side of reducing inflation. They never want to be necessarily driving that inflation unless we're really in a situation like COVID. I mean, nothing was like that.
Yeah.
And who would have guessed?
Yeah.
But things are moving in the right direction, and consumers are certainly more and more taking a variable rate mortgage every day.
Yeah. We're not talking about a big swing here.
This is basically a gentle landing.
Yeah, that's
we
right.
are coasting on the way down.
Yeah, that's right. So I guess it's just funny how gleeful people are when they're saving. I mean, not a lot of money.
25 basis points.
Yeah, I mean, we're not talking huge dollars here, are we, on a mortgage?
Not huge
to discount
dollars.
it, but
not huge dollars.
Yeah.
And depending on the type of product that you have, or give people a little bit of a rundown on what's going to happen now that the Bank of Canada has lowered the key overnight rate. Now the bank prime is going to be 6.45, and that means that if you had a variable rate mortgage that has an adjustable payment, your payment's going to go down. If you have a variable rate mortgage that the amortization changes, your amortization will get shorter. If you have a secured line of credit, your actual interest cost is going to be less that you're paying every month. Or if you have any unsecured products that are tied to the bank prime rate, your cost of borrowing is going to be less. So all of these things are positive, but a 25 basis point change doesn't make a huge difference. But you know what? It's the trend. Things are going in the right direction. Yeah. And, I think that we're going to continue to see this trend for several months, and I think into at least the end of next year.
All right, so how low will it go?
That's the real question. Now the prime being 6.45, I think that we can see the prime in that 4% range. And, a lot of Canadians will have mortgages again in the 3% range. I'd love to have a mortgage at 3-point-something percent.
Yeah.
I redid my mortgage not that long ago. I did a 25-year amortization. And the type of product that I'm in, the payment doesn't change when the prime rate goes down. Yeah. Obviously, I believe in variable. We talk about variable a lot. But since I've done it, and now there's been these rate cuts, my amortization's down like 3 years. And I'm waiting just to see the change once this latest this latest rate cut changes. I'm going to be having a look too and see how many years it's going to be cutting off. So I'm going to be right there.
But we're not going to see anything like we saw when they were historic lows.
I mean, it depends. Who knows?
Yeah.
I mean, I hope there's not going to be another pandemic. I hope there's not going to be a world war. But I mean, really, anything can happen.
Mm-hmm.
And that's why people, some people are like, well, a fixed rate safer. But is it? It's not necessarily cheaper or better or whatever, because what happens if you need to break the mortgage early? You could have a much higher penalty. And what happens if you take this 5-year fix today and the rates are down at 3%? That's a large opportunity cost just for you to, not be weathering the storm. So, fix isn't right for everyone. Variable's not right for everyone. Everybody's situation is different, but that's where I think it's important to listen and ask the questions and make sure that it's going to be the right product for the right person based on the risk tolerance and what's going on in their life.
Yeah, absolutely. So all this talk about people who had this historical low mortgage 5 years ago and all these renewals, and it was kind of doom and gloom.
The renewal cliff.
Right. Did that come to fruition or no?
I mean, I think it could be coming.
It
could be coming in Ontario, and it could be coming in
Yeah.
BC.
Yeah.
Do I think that's going to happen in Nova Scotia and Halifax? I don't think so.
Why?
We're very conservative here. And also, we have such a huge demand for housing. If you need to sell your house, Todd,
Yeah.
you could list it and you're going to sell it like that.
Yeah.
It's not like that in Ontario right now.
Yeah,
That
I've
market is
seen that.
very,
Yeah.
very soft.
Yeah.
Their prices are going down. People are not doing construction. It's a very different story here in Halifax and even in the prairies. Very different story. So, I think it really depends where in the country you are.
Yeah. Can you imagine if you were in Toronto and you bought a condo or one of these houses at the top of the market 2 years ago, and now you're looking at this thing?
Hopefully you're planning on staying in that house for
Yeah.
5 to 10 years plus, just to maybe try to balance out and
Yeah.
make a couple bucks.
Yeah.
It's not like it is here. And it's going to be a long time before we're in that more balanced market. One, we're just not doing enough construction. And we have more demand in the marketplace than we have supply.
So they built too many homes in Toronto, is that what you're saying? Or too many condos?
I think where the price got to, it just became a point of not being affordable.
Yeah.
And, we talk about what the average price is here in Halifax. Let's say it's $500,000 for a single family home. You're lucky to get a 1-bedroom or a bachelor condo in Toronto for that price point.
Yeah.
So, and you need 2 incomes. It prices so many people out of the marketplace, and there's only so much demand in that price point.
Wow.
So, it's a completely different market, and the economics are different than they are here.
Yeah. All right. So you were suggesting that we're going to go down. This trend is going to continue, obviously.
I think it's going to continue,
Yeah.
and I think we're going to continue to seeing the trend go down between now and the end of next year. I'm honestly here for it. And I'm here for borrowers getting more educated, and more borrowers are coming in asking for a variable rate mortgage. They know it's more expensive today, but they're willing to weather the storm. I think partially our clients, because they have me and I can give them the perspective. We're sending out email and SMS, and, we're able to give them that opinion. But borrowers overall, I think, are getting more savvy. And they know that if you break your variable rate mortgage early, you're going to pay a penalty of only 3 months interest. But you can also convert your variable into a fixed. So it's kind of the best of both worlds if you're willing to weather it. Not everybody is.
Yeah.
Some people just are too nervous. Or maybe their finances are just too tight, or maybe with the stress test, they can't even be approved in a variable, Todd. So that's why I'm like, everybody's situation is different.
Yeah.
But at renewal, if you're doing a refinance, if you're purchasing, if you're doing any transaction, I'm like, okay, what's going to be the best thing for this person?
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.